Dear students, we will do a new module 87, Deductions from Gross Total Income, section 80G, part 1. So in part 1, I will explain the theoretical concepts, and part 2, I will do the problems. This is an important topic from the point of view of examination, theoretical concepts and the problem. Now, conditions for claiming deduction under section 80G. This deduction is in respect of donations to certain funds, charitable institutions, etc. So the list of items we will see later. Next is, this deduction is allowed to all assessees, corporate and non-corporate, individuals, resident and non-resident, Hindu undivided family, firm, association of persons, body of individuals, etc. Everybody can claim this. You have to remember section 80C was only for individuals and HUF, but here it is, everybody can claim that. Next point, deduction is available only under the old tax regime. If you are opting for the new tax regime, it is not possible. Now, donation must be paid in money. That meaning, if you are paying something in kind, you are donating some clothes to an orphanage, you cannot claim that. So that is, donation should be cash payments. Now, donations in kind are not allowed as a deduction. Next thing you have to remember, donations must be paid to the specified funds or organizations approved under section 80G. So there are two heads, with limit donations, without limit donations. I'll give you the complete list. Now, donation should not be given to a particular person. If you see a cancer patient, you want to help him, that cannot be claimed under section 80G. Donation should not be made in cash exceeding rupees 2000. Up to 2000 cash payment is possible. More than 2000 it should be through account pay check or online transfer, where they can provide the details. A proper receipt containing the name, PAN registration number of the trust and the amount donated must be obtained. Next is, donations can be made out of taxable income or exempted income of the assessee. So whether it is taxable income or exempted income, there is no problem. They can claim that. The donation should not be given to a political party. Political party donation is different section. We will deal with that. Next point, deduction is available only to the person who actually makes the payment. Whoever the assessee is making the payment, he can only claim that. Next point, deduction is allowed only from the gross total income before arriving at total income. So from gross total income, we will allow the deductions. Carry forward and set off will come. Then we will allow the deductions. Then it will come the total income. Some donations are subject to qualifying limits, that is 10% of adjusted gross total income. So you have to remember that we will see in the list. Now, eligible donations for deduction under section 80G, two headings are there, no limit donations and with limit donations. So one is National Defence Fund, Jawaharlal Nehru Memorial Fund. This is omitted with effect from assessment year 24-25. Prime Minister's Drought Relief Fund. All items or all payments mentioned in this list are 100% deduction allowed, whereas only for this Prime Minister's Drought Relief Fund only 50% deduction is allowed. This you have to remember. Next is Prime Minister's National Relief Fund, Prime Minister's Armenia Earthquake Relief Fund, National Children's Fund, Indira Gandhi Memorial Trust. This also is omitted with effect from assessment year 24-25. Africa Fund. Next, Rajiv Gandhi Foundation. This also omitted with effect from assessment year 24-25. National Foundation for Communal Harmony. Donation to any university or educational institution of national eminence or importance. Indian Institute of Science. That IAMs. All this can come under this. IITs. All this can come. Chief Minister's Earthquake Relief Fund, Maharashtra. The Sila Sakshirada Samiti, that is for the educating people. So this was very famous. So Sila Sakshirada Samiti. Now, any National Blood Transfusion Council or State Blood Transfusion Council. Now, next is any fund set up by the state government to provide medical relief to the poor. Next item, to the Indian Navy Naval Benevolent Fund or Air Force Central Welfare Fund, General Welfare Fund. All this related to Army, Air Force, Navy and all. Next is Andhra Pradesh Chief Minister's Cyclone Relief Fund, Chief Minister's Relief Fund or Lieutenant Governor's Relief Fund, National Illness Assistance Fund, National Sports Development Fund, National Cultural Fund, Technology Development and Application Fund, National Illness Assistance Fund, Any fund set up by the state government of Gujarat exclusively for providing relief to any victim of earthquake in Gujarat. Swachh Bharat course set up by the central government. Next is Clean Ganga fund set up by the central government. But here you have to remember non-residents are not eligible for this deduction. Next is National Fund for Control of Drug Abuse. Next is National Trust for the Welfare of Persons with Autism, Cerebral Palsy, Mental Retardation and Multiple Disorders. Now, next category we are coming, eligible deductions under section 80G with limit donations. Earlier was without limit, no limit. This is with limit. So this will affect the computation. So first point is state or central government or any local authority to be utilized for any charitable purpose other than the purpose of promoting family planning. See, if I am giving donation to a orphanage where HIV affected children are treated, 50% of my donation will be accepted here for qualifying amount. Any authority constituted for the development of housing and planning, cities and towns, this also 50%. Next is any corporation set up to protect the interest of minorities, Christians, Muslims and all, 50%. Then any government or any local authority or an approved institution for the promotion of family planning in India, it's 100%. Next, any amount given for the repair or renovation of a temple, mosque, gurudwara, church or other place to be notified as a place of historic, archaeological or artistic importance or to be a place of public worship. This also 50%. So any amount, next item, any amount given by a company as donation to the Indian Olympic Association or to any other association or institution that is notified by the central government in this behalf. So that is also 100%. So this will change the calculation. So you have to remember sports fund is 100% and family planning is 100%. Now steps in computation. 4 steps are there. I will just tell you that next module when you will do, I will explain that, then it will be clear to you. Now just the theoretical, don't get afraid about this because this is a very simple computation. But when you will see the equation and all, you will get scared. Don't worry about that, I will make it very clear. So first step, calculation of adjusted gross total income, that is equal to gross total income minus long term capital gain minus short term capital gain falling under AAA minus deductions under section 80C to 80U excluding 80G. AAA means those capital assets where the SSC has paid securities transaction tax or STT. This will be mentioned in the problem separately. Step 2, identify the deductions having without limit and with limit deductions. The two lists we have learned. Next, step 3, determination of the qualifying amount, that is 10% of the adjusted GTI or the total with limit deductions whichever is less. The last step, from the total qualifying amount, take away the deductions that qualify for deduction at the rate of 100%. I told you 2 deductions, one is family planning, second is the sports fund. And on the balance amount, calculate 50% for other donations. So this is how we calculate the 80G computation, and it's very simple computation, though the procedure you may find it difficult. But when you do the problems, you will master this. This is what I wanted to explain in this module. Happy learning. Thank you.